Hi, this is Michael, and once again, we're looking at the Aussie dollar chart. I need to remind you, this is not Elliott Wave that I use, it's AriasWave. That's the methodology I created over 5 years ago. Basically, we have confirmation of 69 cents. That means that we're probably going to move higher from here, but we're probably going to make one more dip lower. I have changed the count slightly in terms of the correction, simply because this move that happened since last, what is it, Tuesday, looks like a D wave. So if the move up from the end of like the 29th to the 3rd of Jan was a B wave, then this was a C, D, E. So we're actually closer to a move higher than I originally thought. For me to say that this is not a D wave, I think that's probably not accurate. It's going back to the whole small degree counts are a bit tougher to measure. Now, if we suddenly start moving from this level down in 5 waves and then break above it, then this count will be confirmed accurate, and then we're in a third of a third wave. And if that happens, we're probably going to see this move higher much faster than what we've seen anything move. So it'll be a third of a third of a third wave. So obviously, wave one started in November. We had wave two confirmed, small wave one, two, so a third of a third. But then also you have to understand that the larger picture is a wave three as well. All right. So on the daily, I've got here marked out wave one, two. Now, where's my target? Well, for wave three, I'm looking at 2.618, which is at about $1.15, 16 roughly. And I'm only going to be focusing on wave three price action for this trade. Okay, 2.618. That's a trend fib extension of wave one, but also we'll be counting the waves as it moves higher in order to understand a few things. Right, the first one will be how sharp the wave moves up in its entirety, and track that along the way. Count all the subdivisions and just watch it move higher really fast because wave threes are typically pretty fast. I'll explain to you in a sec why I believe this is an E wave to begin with, and you'll understand why I label things a particular way once I show you that. And this gives me the confidence in the trade, and also compared against US dollar and the euro. So one thing I want to do before I move up to the weekly chart is explain to you that even though this was a deep correction, it did last for 2 years. Okay, so I do think that wave four will be, a bit sharper, and obviously it's shallow. It will be shallower in terms of a percentage retracement before you get wave five. Okay, so it's a lengthy correction, and wave four shouldn't be as long. So that kind of fits with the larger picture, especially with US dollar and the euro. So going back to the weekly now, I'm going to explain to you how I see this. Right. So in total, this is a zigzag unfolding on the larger degree. We had a move down from the 70s down to 2001. That's the first part of the zigzag wave A. Then you had a wave A within the B wave, so the B wave in brackets we're talking here. We had an a B, a C, the C that went during 2016 to 18, and then a D wave down, right down to the Corona crash area, and then we had a bouncing wave one, right? So the expected move here is a wave E. We've had a lengthy wave two for wave E, so I expect this is like an example of a 5 wave move here. So we had a lengthy wave two, so therefore I would assume that wave four will be a bit, shorter and sharper down before we get the final move up. Now, where do I think wave 3 will end? Well, that's where I've got the trend-based fib here. Not at this level. If I was to basically pull this up, it'd be around this area. We'd probably get a pull back somewhat, and then final move up might hit 80% roughly. That's my expectation for this one. And then that will be wave B completed, right? And once we get wave B completed, we're going to see another move down to complete the zigzag. And that move down may not be as lengthy as the original move down for wave A. Wave C might be pretty sharp to the downside. And I believe this will coincide with a US dollar getting considerably stronger after this move down in the US dollar happens. So the thing that's interesting for me is trying to understand what comes after that, but I don't want to get into that now because it's too ahead of time, and that's really not the scope of this video. In terms of how long this will take, look, I wouldn't be surprised if this move runs for the whole year. Wave threes can move pretty fast, and if we're at the start of one right now, I'm thinking it's going to start from here and shoot straight up over the course of the year, even including wave 4 and 5. But for me, targeting 2.618 for wave 3 at $1.16 is wise. Even if you target slightly below that at the previous high, which is a 0.618 retracement back up from the lows, using the $1.50 as the total resistance for this zigzag down. I don't believe we're going to go above that. Wave E, I reckon, will terminate at 80%. It just seems like that would happen. But like I said, I'm targeting the end of wave 3 simply because that will be it. That will be the profit taking. But yeah, like I said, it'll be around that area there. So just recapping on the whole thing, we're getting awfully close now to this continuing higher. The waves were definitely hard to read on this one, but look, persistence is good. Knowledge of the wave is good. It gives you confidence. Confirmation helps. A bit of a pullback might happen, but then it'll probably continue higher. So that there is a pretty good start to the week for Aussie dollar. And once again, this is not Elliott Wave. This is AriasWave that I use to analyze the markets, and I just find it way more accurate. I started off using Elliott Wave when I first started trading and lost a bunch of money and decided that's it. I'm not going to worry so much about the money anymore. I actually want to know how this thing works. So figuring that out wasn't easy, but when you know all the wave components and all the variations, all the variances of each potential wave that can happen, you start to understand that there's only a finite amount of patterns that can occur in the market, and they are predictable. They all join together like pieces of a puzzle. And once you put them all together and you can visualize it and you can draw it out on a piece of paper, then you're getting somewhere. Once you start to see it back testing and actually right in front of you like you're seeing now, that really helps you with confidence and understanding that your methodology, it works, and you can actually start producing more. I can start producing more videos basically, and this is going to come in handy when it comes to crypto, especially because there's a lot of ups and downs comes in crypto over the next few years as we get closer and closer to that time where we're basically it's going to be mega bullish. But like I said, there'll be a lot of ups and downs in the meantime, and I want to make sure that my wave counting and identification abilities are as close to accurate as can be. But as I mentioned, smaller degree ones are always harder to gauge than the larger degree moves. But at the end of the day, practice makes perfect, and you won't ever be perfect in this game, but you probably stand a better chance to have a better edge than a lot of other people. So hopefully you found this video interesting and informative. Thank you for watching.